Yo, what's going on everyone? And in today's video, I'm going to be going over the exact framework that I used in order to make my first six figures within trading. I put together a nice presentation for you guys, and I guarantee if you watch until the end, you'll have a way better understanding of the actual foundations that allow you to scale to six figures. But if you guys need help with your trading, you can send me a DM on Instagram or even apply to work with me in the top link in the description. But without further ado, let's get right into the video. And so let's start with the actual foundations that are going to allow you guys to scale to your first six figures. First off, we're going to be trading futures. Okay, it's the best if you do not have a lot of startup capital, and honestly with the way prop firms are now, it's so easy to scale. 5-figure months are literally so easy with prop firms. And then my actual strategy is a low frequency continuation model, which I will talk about a little bit later, but it is a high win rate, low frequency, literally a 1-to-1 R system. And these basic foundations have allowed me to make six figures within trading. I put these pictures here to kind of, use as a motivation. I just took a really nice trip to Miami, if you guys remember. And then I also bought like one of my dream SUVs literally at the age of 18. And now these foundations are built on these kind of building blocks, which I will explain each one in depth, but I'm going to be talking about strategy, my execution, psychology is very important, as well as how to actually go about scaling, and then obviously kind of like a recap of everything that we talked about. And so we already kind of went over, we trade futures, we trade prop firms, and a little bit about my system is that it's low frequency and high win rate. So let's actually get into the strategy. So I trade a discretionary continuation model, basically capitalizing on expansion moves in the market, taking trades to draws and liquidity. I literally have a quick video explaining, how to trade my strategy a little bit more in depth. The vast majority of the trades that I take are during the New York AM session. And then also, like I said, it is a discretionary model. So not every trade is going to look the exact same. And let me kind of show you what I mean. Basically, what I do is I figure out the main objective on the day and I set conditions for myself. Basically, the main objective for this day was to take out this low right here. This was actually during Asian session. But basically, we have a huge drop off the open. We retrace, we start consolidating. I actually took the trade right here, ended up getting break even, as you can see right here. And then my only condition for re-entering this trade and catching this winner was that we tapped into this 5-minute gap, which we did, and we get strong displacement out. And then that's when I entered, targeting these lows down here. Bro, the strategy is literally the simplest part of everything that my system is built on. Another example, figure out what the objective is on the day. We very obviously want to take out this high up here based on this displacement. We get a retracement into this gap, a strong displacement candle out confirming that we're going to continue higher. We mess around for a little bit. We take the internal high. That's when I go break even. And we eventually end up delivering to the draw on liquidity. And then one more example for you guys here, literally the same exact idea every single time. Displacement, retracement with less volume, and then displacement out of that retrace with more volume that we put in that retrace with, in validating the retrace and confirming we are going to go lower. And again, targeting the draw on liquidity, it doesn't get much simpler than that. The whole strategy is based around draw on liquidity and targeting the highest probable draws on liquidity. You're not going to see me targeting draws that are put in the market like 20, 30 minutes ago, like even an hour ago. I'm targeting higher time frame draws and liquidity, stuff that actually needs to get taken in order for the market to actually make a move. The New York AM session is the best session because it is the session with the most volume. This entire strategy is built around, displacement and volume. And that is, basically the reason why we're trading New York AM, because there's the most volume in that session. Discretion is a good thing to have because it can save you from a lot of losses if you've had like a negative experience trading, this certain time in the day, or trading, this exact draw on liquidity. Like if you're targeting a certain type of draw and you've lost multiple times trading to that draw, you might not want to trade it anymore because your discretion tells you that it hasn't, gone very well for you in the past. Discretion is needed in today's trading. The market's different every single day. So discretion is obviously very important, but it's going to be different for everybody, right? And that is why you journal, which I will talk about a little bit later. Still kind of on that strategy front, I'm going to be talking about the execution. So the actual entry, stop loss, what I'm targeting, and then trade management. So I've already kind of mentioned what I'm targeting. It's literally just high probable draws and liquidity, higher time frame, again, draws that need to be taken in order for the market to make a move. And my entry is literally just based on displacement out of retracement. So you can see this example that I put on the chart. We have displacement here on the 5-minute. We get a retracement to this 5-minute gap, and then another beautiful one candle displacement here on the 5-minute, confirming that the retrace is over with and we're going to continue going higher. And that's exactly what happened. We literally got delivery straight through the internal high, almost full TP. I did take profit a little bit early, but we did eventually getting the full TP. My stop loss is always going to be at the protected low. And the protected low is literally just the bottom of the retracement. As you can see, displacement up, we put in this retracement to this 5-minute gap, and my stop loss goes at the bottom of this low, because if the idea is right, if we are actually going to continue higher, there really shouldn't be a reason that we should, you know, resweep this low. So that is where you put your stop loss, where the trade idea becomes invalid, and 9 times out of 10 it's at the bottom of the retracement. Again, I've already talked about drawing liquidity, but targeting the highest probable draws in liquidity will literally increase, bro. If you just wait for displacement towards the highest probable draws in liquidity on the day, like just think of what the main objective would be for that day, your win rate will be like 75% and up, like seriously. And then the only thing I would say about trade management is I kind of, you know, included a screenshot here, but I basically like to go break even when we sweep internal highs. So this trade, as you can see, my internal high was up here. Once we actually sweep that internal high, I will move my stop loss to break even. But this is another like discretionary thing, because it's not always at the internal high. If I get any sort of, you know, delivery through my entry and, you know, we're kind of stalling, we're not really delivering like I thought we would, then I'll probably just go break even. Literally anything to manage risk to the best of my ability, I'm always gonna do it. So that was literally a like very quick explanation on how to trade my model. It's very simple, but guys, you're gonna realize really quickly that when you're trying to actually scale, you know, end up making that 6 figures within trading, the majority of the issues that you're going to run into aren't going to be involved in the strategy or execution in your strategy or anything like that. 9 times out of 10, it's going to be involving your psychology, which is what we're going to talk about right now. Guys, the best way that you can build confidence and build your psychology to the point where you just feel like, okay, I just need to hop on the charts, take my trade if my setup presents itself, and get off. The one thing that is going to help you out with that and increase your edge is by journaling and backtesting. I make backtesting videos pretty frequently for you guys, and I think I'm going to keep on doing them because I actually do kind of like making those videos. But backtesting is just such an easy way to, again, build your discretion. If you're unprofitable, you shouldn't be on evals. You should literally just be on a backtesting site, you know, building your discretion, building your edge within the market, and then you should hop on evals. You'll save a bunch of money. But journaling is automatically going to increase your confidence. The other thing that is going to increase your confidence is going into each trading day with a plan. I'll just give you a rundown of what my plan is and kind of how I approach the market. So I will go literally just hop on the charts, go to the higher time frame, the 4 hour, the 1 hour, mark out my highest, you know, probability draws in liquidity, and bro, literally sit on my hands on the higher time frame on the 5 or the 15 minute and wait until we have displacement confirming to that draw in liquidity. Then I'll scale down to the lower time frame, the 1 minute, like maybe even the 5 minute, and then look for an entry. And I promise, as long as you stick to your plan, bro, like your P&L is actually gonna go through the roof. You guys need to put the process over the outcomes, and realizing that if you take a loss and you followed everything involved with your plan, then there's nothing really to be mad about. Your experiences within trading are only negative if you perceive them as such. And that is a little reference from this book by Mark Douglas. Trading in the Zone is literally the best piece of psychology that I could recommend to anybody. Like, the amount of people that I have referenced to this book is honestly insane. I should get like a promo code or something. But if you guys are looking for, you know, any piece of like if there's any knowledge that you could consume, literally read this book or listen to the audiobook. It is unbelievable. And I kind of just wanted to touch on backtesting a little bit because, again, like if you're not profitable and you don't want to waste your money on evals, build your edge through backtesting and journal those backtesting sessions. This is going to help you build your edge without actually risking in a live market. And then losing, like guys, losses are a part of every single strategy. It's inevitable. I actually had a pretty bad trading week this week, but I know that I'll be fine because, bro, trading is all about probabilities. Just because a trade doesn't play out for me today doesn't mean a trade isn't going to play out for me tomorrow, right? It's the casino analogy. The casino can pay someone out $1 million right now, but they know that in the long term, they'll be profitable. Because why? They win the majority of the time. And why do they know that? Because they have data to back that up. And that is the exact same thing with trading. Bro, the casino analogy is my favorite analogy. If I lose this entire next week, I have data that will back me up and still tell me that I'm going to be profitable because I have won more times than I lost trading the system that I'm trading. So not to spend too much time on psychology, but psychology is very important. And the best thing that I can tell you is to read this book and to, again, backtest, build your edge, build your discretion, and journal those backtesting sessions. Also, creating a plan and just like building it into your mind that you're going to stick to this plan makes trading so much less stressful because you're literally going into the day with one thing in mind, and that is to follow that plan. And if that plan does not present itself, then you just don't take a trade, and life's like that much more simple. Next up, I'm going to touch on scaling a little bit. Also, like I added a little picture of like the journal for the first half of the year so far. A lot of break evens, a lot of wins, barely any losses. I trade a high win rate system again. So, but I did want to touch on scaling with prop firms, because obviously we're trying to make 6 figures here. Guys, the best firms that you can go with, and I don't have codes with any firms. I am not a sellout just yet, but the best firms that you can go with are going to be Lucid, Top Step, Alpha Futures, and My Funded Futures. I currently do not trade on My Funded Futures. I have taken a payout with them in the past, but I have a bunch of students who use My Funded Futures, and I've heard nothing but great things. They pay out very consistently. But Top Step, obviously, like, best rules in the game. They are like, and they are changing stuff up pretty frequently, which is, you know, a bit weird, but like, they're always gonna have the best rules in the game. And then Lucid and Alpha are 2 prop firms where you can pass the evaluation in literally 1 day, which is huge for like CPI and other high impact news days, which I will actually be full porting CPI this Wednesday. I think I should make a video on that. But yeah, literally stocking up on evaluations for these days is huge, and these are the best firms to do it with. The account size that you guys should be trading is 50Ks. You shouldn't be trading 100Ks. You shouldn't be trading 150Ks. The ROI on 50Ks is better than all of the other like options that there are out there. There is some sort of math equation to actually back that up. I don't really have it in my head. But the 50Ks are the accounts that are going to give you the best return for your money. Now, risk and evaluations both go in like the same category, in my opinion. I personally full port my evaluations. I feel like I'm at the point in my trading where I don't need to be spending too much time on evals. But what I'm actually risking on XFAs is I usually like to risk $500 to $1,000 per trade. And again, guys, like I trade a low frequency system, so I can actually size into the trades that I take in order to capitalize and make more money. But when I say that, I feel like some people get the misconception that you need to over risk, which is very like a very stupid thing to do. I see people like risking 2-3 minis on an XFA. And that's just not very smart in my opinion. I'd way rather stack up accounts than, you know, risk like very heavy on like just 5 accounts. The other thing I will say is if you are on evaluations and like you're not comfortable in full porting, then you should treat it like an XFA, right? Like you should treat it, you know, take $500 to $1,000 per trade, just take A+ setups, and you should like obviously pass within a month. You shouldn't be getting the rebuild cycle, and you should be able to pass like within the month pretty easily. But that was a quick little guide on how to scale. I actually have a video on how you can actually go about scaling to your first 10K month within prop firms, so go check out that video. But let's actually get to kind of the summary. The number one best feeling within trading, I would say, is once you finally achieve consistency. And I'm not just talking about payouts. I'm literally talking about just going into every single day and performing and getting off. Like literally that, like being that consistent, not even just winning, literally just getting on, like win or lose, get on, win or lose, and then get off. Once you can truly achieve that consistency, bro, I promise the P&L will follow. And again, like refine your system, you know, look into your journal, see, are there common mistakes that you're making within your trading? And if they are, make those changes. Trading is a lot easier than people make it out to seem. Like, yes, it does take people very long to become profitable. It took me 10 months. Again, I say this all the time. It took me 10 months to even make my first dime within trading. But if you dumb it down and actually make trading, you know, as simple as possible, it will become so much more easy to actually follow your plan and be consistent. Scaling, I've already talked about this. Again, I have a video on it, but you shouldn't really be on more than one account unless you're sure that you can comfortably take more than one payout per account. So if I hop on my first evaluation and I pass it and I actually get a payout on my first ever, you know, funded account, I shouldn't I shouldn't be scaling to 5 accounts immediately. Slowly build your way up. But once you are actually, you know, confident, once you've taken payouts on like 3, 4, or 5 accounts, then you can actually start to scale into more firms. And like you'll find out very quickly, like having 5 accounts on multiple firms is honestly a cheat code. Your payouts will literally double, if not triple. Losing within trading, again, like guys, you're gonna realize very quickly that losses are an inevitable part in trading. I have a student who takes the winning trades. He knows how to take winning trades, but when it comes to losing, he cannot handle it and he'll go on tilt and he'll end up blowing everything. At this point, that student is on his way to a 5-figure payout, which just goes to show like how quickly stuff can change if you actually like put your head down and stick to the plan. But the main thing with him was just realizing that losses were an inevitable part in trading. And once he did that and just put his ego aside and learned to take losses and wear them on the chin, his P&L started to skyrocket. He felt less stressed because literally he just took a loss and got off. He didn't make his entire entire life about trading, and he learned from it, which again, like lessons. This is the last bullet point that I have. Obviously, don't change up the plan based on a loss, but don't be so ignorant to the point where you're not journaling because you think you have it down. Guys, I have made multiple six figures within trading, and I journal every single trade that I take. Seriously, just about showing up every day regardless, finding your edge, mastering your system, building your discretion through back testing, again, journaling, managing risk to the best of your ability. And like once you have all that down, like just start scaling, bro. It is honestly so easy. Find a strategy that you're confident in and can repeat. Make a plan around that strategy. Stick to the plan every single day, regardless of the short-term outcomes. Learn how to properly scale, which I've made videos on in the past. And guys, that is truly how you achieve your first six figures within trading. And truly, that's just how you achieve profitability in general. So again, guys, I appreciate you for watching to the end of this video. I hope you guys found a ton of value. I did spend a lot of time on this presentation, and that's going to be the end of the video, guys. I appreciate you guys for watching to the end. Again, if you guys do need help with your trading, you can send me a DM on Instagram, or you can apply to work with me in the first link in the description. Again, guys, simplify your trading, and I appreciate you for watching again to the end of the video, and I'll see you guys in the next one. Peace out.